Hey traders, Nick Sheehan here, looking at sharing how one would manage a tough trade. So I had been bullish this week, but not with upside money, meaning I didn't buy and hope. I sold below support, what I thought was support. I sold a credit put spread with the SPYs at 279. So I collected a certain premium. I can't remember off the top of my head. Let's say 13 cents or so. So the yield would have been pretty nice for just a few days trade, above 10% for sure, even after fees. So it was an easy shot with limited risk. It was just a 50-cent wide spread, so the yield is probably above 20% too. It depends on where you end up closing it if you don't let it run. So it came under pressure earlier in the week. You all know that the week wasn't all rosy. This is the S&P, and this is a 5-minute chart. So if we go back a little bit more than this, you'd remember that we had some tough times in the week. So those 13 cents I collected went up to say 23 or 24. So I looked at my support levels and I still liked them. My thesis was still viable, so I doubled up. So now I only needed a small bump to be even. And indeed, that's what happened. We bumped one of these days, I can't remember, and I got even. So I could have closed it. Again, I reevaluated. I said, no, I'm going to stick it out. So here comes today. We opened with a big bang in the morning, and then we faded. So I looked at my profits, and it was almost at maximum profits with hours to go. I was like, you know what? I'm going to buy back the risk. It was like 7 or 8 cents. I bought back the short leg that I sold, this 279 put. I shorted it. And then we had this dip. If I hadn't done that, I would have gotten myself in trouble because that 7 cents I paid to get out of the risk turned into 30. So I would have done tremendous damage to my trade. It would have gone from big profits to a loser probably. So now what happened is because I only bought the the short leg, I took the risk off, then now I have an asset that now inflated in price. So I ended up selling that asset for more than what I paid to close out. So in essence, what happened is, because I legged out of the trade, I got paid to close a profitable trade. It doesn't always work out this perfectly, but the point of this, not to boast, is but to tell you how I did it, because I used levels. I'm going to bring in a chart, same. This is the S&P, this is the ES. You can see this is the open in the morning. I said, you know what, this is up against resistance. I think the one was 28.12 a few days ago. So I said, I don't want to be greedy. Let's get out. This is resistance. This was the value area. We clearly were above the value area. And then as we started falling, so I got out for the 8 cents I paid to get out. So now